Oh man, there's nothing that clears my head like a morning swim in a beautiful lake.
Hey traders and investors, Serge Berger here. So let's get right to the trade I want to discuss today. We have seen the S&P 500 over the past couple of days basically break higher, and while that is what it is and momentum chasers are chasing that higher, I think the S&P remains one of the more difficult trades over the past, let's say, year and a half or so. I think there are much easier trades. We've been looking at things like gold, some single name stocks, and even bonds. So to me, sort of a different way to trade the S&P 500 that I think is more straightforward indirectly is through volatility. And in full disclosure, the trade I'm about to disclose to you guys is one we've already done in the clubhouse. But again, for purposes of education, I'm willing to share this with the public. So this is the VIX, the CBOE Volatility Index, basically reflecting the implied volatility or sort of the price of options, or I guess fear is how some people look at it in the S&P 500. And you can see very simply, if we look at the long-term weekly chart, you can see whenever the VIX drops below, let's call it 14 or so, it tended to be a decent spot to buy it through at least a multi-week, sometimes a multi-month lens. So you got to give this some time. So let's zoom in a little bit closer, and I'm just going to use the daily chart here, make it very simple, and we'll just look at the past sort of the year-to-date move in the VIX. And you can see what the VIX does, it tends to be sort of mean reverting. So it has these spikes, right, these big rallies, and then ultimately mean reverts lower. That's just how the VIX works. So instead of making a bet on one of these big spikes, which do happen all the time, but they don't come right away. Usually when volatility is this low, although they can. So instead of making this outlier bet, what I want to do is make a very calculated bet, giving it at least a few weeks, maybe even a month or two, and see if the VIX from here can't get back up into like 15, 16. So from the current levels, as I'm recording this, the VIX is well below 14. That would be a decent sized move. That would be about, let's call it anywhere between a 10 and 20% move in the VIX. The way to trade the VIX, in my opinion, is through the options on the VIX. Very simply, what I would like to usually do is use a couple months out, so go into September or October options and buy, say, like a 15 strike call option that gives you enough time and you don't have to pay up too much for those options. On average, of course, the VIX can be a little more complicated than that, where you have to look at the VIX futures curve and all that stuff. But in the aggregate, that tends to be a decent trade to do. So very simply, I think here the trade to try at least is to get some VIX using September or October options, buy say a 15 strike call, and see if we can't get a little bit of a lift higher given all the uncertainty we have out there still and coming into earnings season. I think the VIX below, let's call it 14, is quite irresponsible. So I think this is a decent trade to try here, buying some VIX call options. At least that's what I did.